What's going on, guys? It's David Piatek. Today, we're going to talk about the first quarter of 2025 and the housing market. I'm going to share a report with you that talks about what is happening with mortgages, foreclosures, insurance, all the things that impact your decision to potentially become a homeowner. If you are a homeowner, did I make the right decisions? And if you're a seller, should I be selling right now? And what does that look like? For some of you, you're going to be like, I knew it. The end is coming to the housing market. And for others, it's going to bring hope. So please drop a comment, like the video, so we can get the YouTube algorithm to share this with the veteran community so we could really bring education to the veteran community. And that's what we do on VA Housing Education. So let's go right into it. So I'm going to also drop a link down below so you guys have access to the report yourself. So one thing that I do want to note for you guys where this information comes from and what it is. So most of the information is gathered for the McDash and McDash Flash loan level mortgage performance data sets. Now, I want you to take a look at this. That it has a robust public record database covering 99.99% of the U.S. population, which is pretty significant. And that's why reports like this are great to review, because if you look online, there's so much, I wouldn't say propaganda, but there's so much fear mongering that's happening. You really need to take the information into your own hands and make a decision, because you have different benefits with different loan products, especially with the VA home loan, that is phenomenal, that people oftentimes, I think, just sit on the sideline and just waiting to use it because they're scared. So this is a pretty big metric right here off the bat. So an overview of mortgage performance. So overall mortgage delinquencies fell 6.6 in January, more than twice the typical. That's due to improved performance among hurricane-related delinquencies and VA delinquencies rolling into foreclosure. Now, that is a very negative piece of this, and we're going to kind of go through that. So delinquency rates have dropped off by 24 basis points. The number of borrowers a single payment past due dropped by 98,000. That's pretty significant drop, and I'm gonna show you guys in the next document what that looks like. And there's also been almost a 30% increase in foreclosure starts. And why is that? So if you guys take a look here at the bottom, that you're gonna see that foreclosure starts jumped and sales increased 25% as the VA momentum expired. So loans in active foreclosure increased 14,000, but they still remain below pre-pandemic levels, which is also pretty positive. And then we also see a decrease of 16% in payment activity. So that's the single monthly mortality fell to 0.48. So that's the prepayment activity was the lowest than it was in the near year. So people are not prepaying their mortgages as much, which, as things get tightened and rates go up and costs go up, that also has a big impact on there. What I want to touch on is right here as well. All in, 490,000 previously delinquent borrowers were cured to be current in January. That's the highest volume in a year, which also I think is pretty interesting to see. Also, we see delinquencies for all stages improved, although a portion of decline in borrowers 90 days or more late due to increased foreclosure referrals following the expiration of the VA foreclosure moratorium. So that's pretty interesting to see that the VA aspect from the VA home loan perspective is causing this. But this is why you guys want to know what is happening in the market, and is there advantages for you guys to be able to jump in a purchase of foreclosure, because a lot of veterans do ask about that along with short sales. Now, purchasing a short sale or foreclosure with a VA loan is not a problem. Normally, it's a time perspective that gets people at the end of the day. It might take too long. You might want to switch just to doing a regular purchase instead of that. You guys are going to see national delinquency rate for first lien mortgages about 3.47%. That is low, but also that just still shows you that there are people that are delinquent. And this next chart shows you how many people are 30, 60, and 90 days or totally delinquent. This also kind of gives you an idea based over the last over the last 11 years what that performance looks like, so you can kind of see where the data is trending to let you know, is there going to be a apocalypse of the housing market? Is it all going to crash and I can finally be a homeowner? I don't know, right? It's up based on each individual person. This is an interesting statistic as well, because I'll tell you that working, being a veteran myself, being in the veteran space and housing and financial education, and teaching this stuff on a national level, a lot of times the real estate community or the consumer community looks down on VA loans because of either bad experiences in the past or that information being passed on to agents and sellers just in general. Okay. And a lot of times they're like, well, veterans don't have any money because they're not putting any money down. That's not the case. That's just how the benefit works. I want to be very clear with that. And again, I'm used my VA home loan the other year and I ran into the same issue. And again, like, it's something that we do. So this is just kind of statistical data on saying foreclosures and what type of products are started foreclosures. So as you guys kind of notice on this graph, in blue is going to be VA loans, in black is going to be FHA loans, and in like that gray, it's going to be conventional loans. So yes, there's more conventional loans than FHA loans, and there's less VA loans than the others. But this just kind of shows you that VA loans have been at a lower amount than FHA or conventional loans. So that's just something to keep in mind, especially when you're thinking about, should I use my VA loan or not? It's a phenomenal product. And if you do run into problems, the VA does offer solutions to prevent people from going into foreclosure, like coming up with payment programs. And that's all can be found on the VA's website. You guys can also reach out to them to be able to get some help. Now, touch base on the California wildfires and the impact on January mortgage payments. As we see here, they obviously did see a decrease in a negative impact for that, just because maybe people didn't have the money to be able to make their payments. So, and it also shows you that depending on what area you're in, the mortgage payments that were past the 14th date. So if you guys don't know, mortgage payments due on the 1st of the month. And then you have the 15-day grace period normally, okay, to make that payment without any penalties. But, you should be really careful. You try to make the payment on the last day. It may actually count towards the next day. Then you have a late fee, and then you make your next mortgage payment. And now all of a sudden you could be late because you made a payment without paying the late fees. I know that was a lot. You could probably just rewind and re-listen to that. But that's why I would say try to make your payment sooner in the month than towards the like that 15th date, just because from a payment perspective, you just don't want to be late and then get caught off guard. We've seen it too many times. That's why really paying attention to your mortgage payment is so important. Plus, remember, guys, mortgage payments change because taxes and insurance, which we're going to cover that here in a second with property insurance trends. Now, this shouldn't be a surprise, but the average annual property insurance premium among mortgage single-family homes rose about 14%. So average is $22.90 across the country. Obviously, some places have it much more than others. But what I'm going to break down for you guys, they should actually show a map of where insurance costs have gone up the most. And when you're thinking about home ownership in general, right? Sometimes you may have different benefits, like if you have disability, you don't have to pay property taxes. That's a huge benefit. That's a huge plus. But you also have to factor in insurance costs. But it also may offset that decision where if you have property tax breaks, then you're looking at, oh, my insurance is a little bit more, but I could still afford it. And that's going to be the key when looking at making these decisions. So as you see, the insurance premium has gone up a couple $100 over the last year. Now, and again, that's negative. And if you look at 2023, this is the largest single increase on record dating back to 2013 when ICE began tracking the matrix. So again, those are pretty big numbers, and insurance and affordability is a pretty significant or big. It's a pretty big deal. So as you see, mortgage payments can change about 6% to 10% or 6% to 14% in any given year. So just make sure you're tracking that. And you also see people shopping for insurance more than they ever have before. That's some of the data that's coming out of this. So just take a look and see where you want to potentially switch insurance companies to be able to do that. I'm going to zoom in a little bit more on this map so you guys get an idea of how much insurance has gone up in different areas. So you go from 22%, and look at Florida. So right, Florida, its annual premium has gone about 6%, 5%. And I'm sure that's based on, wherever you guys are at, it's going to be hyper local to where you're at. I mean, look at Texas. You're seeing 19, 18% increases. So make sure you guys are tracking that data. And when you're talking to an insurance agent, just ask them like, hey, what has the insurance premiums gone up lately? And you can then track it over time to see, maybe is this an area I don't want to move to because my cost of living continues to go up, but I can't make up for that in my own income. You definitely don't want to be caught with that, because then you don't want to lose your VA benefits. I mean, you've worked for them, you've earned them. So keep that in mind. There's also another chart that shows it in a different format, kind of seeing that Salt Lake City, Seattle, LA, Arizona, Riverside, Portland, to see some of the highest increases, Dallas, Texas. But some of the lowest ones might be like Jacksonville, Orlando, Tampa, which is interesting because they had a lot of hurricanes, and a lot of people that are purchasing in that area have been talking about how much insurance has gone up. But if you look at the bottom chart, that shows you the annual premium. Then where you see, like, let's say Salt Lake City, yes, but it looks like it's about $2,800 versus where it's like $3,200. But again, really, you need to identify where it is that you're looking to buy and how that affects your overall financial position and how it could change your financial position. So that's what I wanted to share with you guys today. I'm going to drop that link down below. If you guys have questions, please drop them down in the comment section. If you guys are interested in utilizing your VA loan or in the process of using a VA loan and want a second opinion, please schedule a call with me. I'm happy to talk with you, walk through the situation, just so you know that you're getting the best deal possible and the best advice that you can get. I'll talk to you guys soon.